Ever wondered why, even with the best of strategy, most traders still lose money in the stock market? Hi, everybody. This is your Nifty guy, and today we will be discussing about the silent killer as well as the ultimate weapon in trading, which is your mind. Welcome to today's episode on the learning as well as the psychology series, which is a part of it. And today we'll be discussing about why most traders fail, the psychology behind winning trades. I have intentionally put it near the Nifty's all-time high, which is marked on my chart always. The reason being, if you control and master the psychology which is behind winning trades, you can reach a all-time high in your trading career. So we'll be discussing psychology or basically the psyche behind trading is something which cannot be covered in completely in one video. So this is part one of the psychology of trading series, which I am planning. And today we will be uh, working and discussing about certain aspects related to psychology. There will be no charts, absolutely no charts, but I request everybody of you to please watch this video till the very end. This might be one of the most important videos that is there on my channel because trading isn't just about chart and indicators, it's more of a mental game. I'm sure you would have heard many people say that trading is 80% psychology and 20% strategy, and that is absolutely true. Over 90% of the traders fail not because of bad setups, but because of poor mindset, right? Usually, what is the case is that amateurs focus on strategy, whereas professionals focus on psychology. Uh, Before we start ahead with the psychology detail of the video, I would want to put out the two basic emotions which control everything in the market. Number one is greed, and the second is fear. Now, why is it very, very important to understand what are the basic emotions which will be controlling everything in the market? Is because most people act out of these two emotions, right? Either they get too greedy and then they take those trades, or either they are too fearful and they do not take those trades, right? So these are the two basic emotions which control everything in the market. And it is, as a trader, your first job would be to master these two emotions. I will be explaining how we can do that eventually. And because of the way that we act out based on these two emotions, we tend to have certain psychological traps which we are target of or which we fall into. And what happens is we are traps of, or we get FOMO. We lead to fear of missing out, which leads to chasing trades and poor entries. Now, this usually happens with, in case of a greedy mindset, wherein you have seen that a particular move has been there and you were not a part of it. And out you act out of FOMO, right? You are not acting out on the basis of your setup or the basis of your trading plan, but you are simply basing out of the fear of missing out, wherein you feel that if you do not participate, you are missing out on something very, very big. And you would be ultimately, it will lead to chasing of trades and poor entries, right? Then again, out of greed, what people mostly, so these are the certain traps which I am focusing around here. Then there is a trap of over trading. Trading, if you are doing the trading just for the action and not based on the setup, that is something which leads to over trading a lot. So that is the reason I always focus on planning your trades and trading your plan so that you don't end up actually over trading. And basically, right now, I'll be discussing the problems which are there, and then we will discuss how to overcome those issues. Third trap which is there in the market is revenge trading, right? You take a trade based on everything is right, and you will hit your SL. That is absolutely right. See, that is a part of the game. However, fantastic or brilliant your strategy might be, market will surprise you sometimes, right? You will be doing everything right to the point, and still you will get a stop loss which will be triggered. And then what you will try to do is try to win back the losses emotionally, right? You have to understand one thing, markets don't owe you anything, right? In case of a stop loss which has been triggered, the best is to accept it and then perfectly move on. We'll again come about how to control revenge trading. Now we have one of the last traps, which is fear of losing. Now when I started trading and my whole psychology part was controlling this part. Over trading, revenge trading, fear of missing out was not a problem with me, but fear of losing was a big, big issue with me. I used to freeze before taking a trade. Everything was planned, the setup was there, the market was playing out exactly like I had wanted it to. But still, when the time came to pull the trigger, to press the button, to slide the arrow to execute the order, I froze. Uh, so that is something which you do when you are risk averse, even when setups are valid, right? This was a issue on the psychological part with me. Now, some people might be having an issue with over trading. They will definitely not be having a issue of fear of losing because they are punching in those trades. They are not afraid of losing. Some people who would have over trading will be having FOMO, will be having revenge trading and everything. So that is a combination of everything. Now, what we can do to make our psychology better so that we are not falling a victim to these traps, right? Now, once we identify the problem, the first and major thing is to identify the process, which identify which problem do you have and which particular problem or issue that is there that we need to address, right? Uh, so as I said, fear and greed, these are the two major emotions which drive most of the traders. And this is something wherein we need to master this in order to become a successful trader. No amount of learning, strategy, or setups is going to help you until and unless you uh, look at identifying what is the issue with you. Are you taking trades based on fear of missing out? Are you simply over trading? Are you taking excessive trades because of revenge trading? Are you not actually taking those trades even when you have done the homework, you are prepared to execute a particular trade? So that is the fear of losing. And now we will be discussing about the solutions, which we can, practical solutions, which we can use to improve our psyche and improve our trading. Number one, I believe, is set up realistic goals. Please don't mind the wrong typing. I am recording this video it's almost 1 p.m. Uh, at midnight, and that is the reason I'm typing in the dark. My daughter is sleeping in the room. So you have to set up realistic goals, right? Now, say for example, you're trading with a capital of 1 lakh rupee. You cannot expect to make 1 lakh rupee in 1 month, right? You have to set up a percentage of return that is higher than what usually banks and even investing in mutual funds can give you. Say, for example, a 12 to 14% is a very good and very considered a very high return in terms of a monthly return from trading. And you need to set up those realistic goals. And in case, say, for example, why am I asking about focusing the first point on setting up of realistic goals is what people do is they start with small capital, right? But they want big profits. Now, this is a major, major problem because if your initial capital is small, I had said this particular point in one of the earlier videos. I'll repeat it again. The stock market is also called capital market for a reason, right? You need big capital here to actually make a living out of the stock market while trading, and that too after a lot of learning in the market, after you have given a lot of stop losses, you have spent a lot of time in the market. That is something that comes after that. But the point I'm trying to put across is you need to set up realistic goals about what kind of returns are you planning to get on your capital which you have deployed specifically for trading. right? And then what you can do, say, for example, you're targeting 10% a month. Each week, you just need to focus on 2.5% of your capital. That is 4 weeks divided by 10% divided by 4 weeks, 2.5% is what you need to do in one particular week. Again, that divided into 5 trading days, you get the math right. The goal becomes smaller and achievable. But if you set up unrealistic goals, you want 100% returns. See, it is not possible. It is not possible. It might be possible you might get 100% return in some option buying hero zero trades, even 200, 300%. But I'm talking about realistically speaking figure at the end of the month, right? Which combines all your total sum of profits and losses over a period of time. So number one, which I believe is to set up the realistic goals. Uh, then I believe trusting the process. Trusting the process is something which I believe is, again, one of the most important uh, psyche point that you can create for yourself. Trusting the process, first of all, you need to have a process, right? You need to have a setup. And then once you have back tested the setup, good number of for a good longer period of time, you need to trust the process, right? There are best of strategies or best of trade setups which will have its own drawdown period, wherein you need to trade irrespective of whether you are facing losses in that particular setup. If you have confidence in that setup, if you have back tested that setup, if you have forward tested that setup, and you are aware of its potential, that is the time when you need to stick to the process and to trust the process. Now, I'll give you a very simple example of trusting the process. I started this YouTube channel to help simplify trading for most of the retail traders. I am also a retail trader, and there were certain issues that I had faced since the time I started trading. And once I reached a particular level of learning, I wanted to share the same with every one of you. Now, the views on my channel are not much right now, right? I am aware of that. Mostly what people like to see as a content on YouTube is they want immediate strategies, right? If I put up a tomorrow, if put up a video as an experiment, the title of it would be what is this strategy will give you 20% returns every week. The videos will go viral. It will go crazy in the amount of number of views that is compared to the current videos. People here do not want to learn, do not want to put in the efforts. They want ready-made meals, and in the world of quick commerce, that is something I believe people have and really started expecting from everything. But a market is something which will not be giving you that. And that is the reason I believe that there's a very selected audience for my channel, because I'm not giving you a fish to eat for today's dinner. I'm teaching you fishing, wherein you can, if you follow the setups, if you follow the system, you follow market structure, you follow price action, you will be able to take independent trades all on your own. No need to follow anybody, no need to take trading tips from anybody, no need to take trades from anybody, no need to wait for any setups from anybody. It is that simple. Trust me on that. But you need to trust the process, and that is exactly what I'm doing with this particular channel, even though I'm not getting great views, right? So far, I have not missed even a single video of the daily Nifty, Decode Nifty the series that I had started. Every single day, I have put up a video. And even when I was in Japan traveling on a vacation with my family, the video streams did not stop. So that is the trust that I have in the process. If I am putting out quality content, with time, people will definitely be associating with me and my video views would be increasing. So that is the kind of trusting the process that I am intending to specify over here when I'm talking with regards to the market. Right now, I have my own setups. I have back tested them, and trusting the setup will come from back test plus forward test in live market, right? Uh, One more point which I believe is to stop regretting, start learning. What most people do is once they hit a series of stop losses, they will simply start to say, okay, this is not working for me. They will go to the YouTube and start learning or try to find out new strategies that they can use and deploy, not understanding that that might just be a drawdown phase of that particular strategy, and very soon the strategy will still be working and giving out you the result that is expected out of it. So that is something which I believe that people should stop regretting and start learning in the market. Regret is the only thing which is constant in the market. You will be faced with multiple regrets every single day. Sometimes you will have the regret of not taking the profits early. Markets might come down. You would have seen a probable unrealized profit, but markets came down. You will have the regret of that. Why did I not book at the highs? Sometimes you'll have the regret of booking too early. Sometimes you'll have the regret of taking an SL. Why did I take an SL? Because the markets might just take your SL and then move in your favor. Sometimes you'll have the regret of not taking the SL. You had decided to take an SL at a particular point, but you kept waiting in hope, right? You kept waiting in hope that the markets might reverse from here and my loss will soon turn into profit, or even if it comes to break even, I will be exiting. No, those are again regret that you will have. Definitely, you will be having that regret later on when your losses will start compounding, and you will be thinking that, okay, right, I should have exited at that particular point of time. So stop regretting, right? Regret is the only thing constant in the market. Instead, start learning price action, start learning market structure, and I believe that is all you need, right? Now, most people like if I have to put up any videos on my channel about the strategy part, I can easily put up at least tens of strategy videos, right? But so far, if you would have observed, there is not even a single video on my channel which says this is the award-winning strategy or this is the no loss strategy, because there's nothing like that which exists. Obviously, there are strategies which are there. There is a very simple strategies which anybody can use and apply: opening range breakouts, stochastic, using moving averages, and using Bollinger Bands. There are a lot of strategies which can be formulated, which can be used on a daily basis. But do you have the emotional stability to stick to the entire strategy even when it is showing the drawdown phase, right? Because that is something which would be the right thing to do. And without it, you will simply be jumping from one strategy to other strategy without uh, actually trying to understand what is the full potential of that strategy. And strategies are they will be forming a key concept in your trading. So there are people who only trade on moving averages. I know of people who trade on moving averages. There are people who trade on exponential moving averages. I know people who trade on simple moving averages. They are both, these are two set of different people that I'm talking about, and they both of them are very brilliant traders, profitable traders. And the best thing about them is they stick to their strategy. That is something that they have mastered. Like I stick to Nifty. I am sticking to Nifty. I believe I understand Nifty's price action better than anything else, and I want to focus on one instrument. This is something which I have fine-tuned for myself, and I focus on price action along with RSI. And that is what is my setup, and it is their setup which they use using MA. So that is something which, even if their strategy or their setup will give them a series of losses, they will still be trading using that particular strategy only. Even next day they will come, they might have hit a stop loss earlier, but still they will be going ahead and taking the same trade, well, not the same trade, but trades based on the same setups the very next day. They will not question their strategy because they have enough faith and trust in that particular strategy. They've backtested it so much that they know that phases will come. That is a part and parcel of the trading world, right? So you should stop regretting, start learning. Do not focus on strategy part first. Focus on yourself. Focus on your mind, whether you are capable enough to stick to one particular strategy, even in its lows, right? Uh, then another thing which I believe is which everybody should have is a trading journal. Now I have a numbers file or an Excel file on my laptop in which I punch in the daily trades. I screenshot the market on which I put the long or short trade, the tool which is there, I screenshot those. I put out those screenshots in one of the cells as well. and I put out everything, my entry, my exit, my profit, my loss, profit in terms of the points, what was the net return on the capital deployed, and everything. Because that is something, journaling your trades will help you revisit your trades. So that what happens is sometimes when your strategy or your setup hits a roadblock, it hits a series of losses. And when you start to question, you can simply go back to the trading journal where you have traded using the same setup, and you will be able to see real charts that you have actually traded. And that is something that is going to instill that confidence in your setup, and that is something which will help you stick to your setup even in the worst of times. And I believe overall, you are not just simply keeping a track of your trades, but also emotions, right? So, what was I feeling when I entered this trade, right? All these things, I believe, if you just put in as a column in your trading journal, you can note it down or keep a note of them in a diary using a basic pen and paper also. That is something absolutely fine. But please do maintain a trading journal wherein you put in your trades. Take out 15-20 minutes. The way if you are also putting down your trades in your trading journal, you are also kind of revisiting the trades, right? And that particular setup with time, it's gonna get cemented in your head. And next time when you are seeing similar setup which is being formed, you will recollect all the previous trades based on the same setup that you had taken, and that will actually help you take that particular trade with much more confidence. And that is what is needed in the market, right? And then again, uh, what I believe is for any trading setup, you need to have a predefined set of rules, uh, or maybe a system, if you want to call it that, wherein you follow the process over profits, right? You are Before you, like I always say, before you enter a trade, you should be aware of what is the stop loss, because based on the size of stop loss, if the stop loss is small, big, your position sizing will also depend. And position sizing is one of the next points of by controlling your positions, controlling your emotional psychology is position sizing. So I will cover both these points together because a lot of the position sizing will also depend on a predefined set of rules. Say, for example, for a particular trade of Nifty, my SL in the option premium is coming down to 20 points. For another trade, it is coming down to 10 points. Now, where the SL is big, the logical SL is big around 20 points, I'll not be taking an SL of 10 points, right? I'll wait for either the market to actually trigger my SL or give me my profits. So in that case, what I can do is just because I'm seeing a bigger SL, I can reduce my quantity so that my overall risk is the same, right? I hope I am being able to explain how position sizing works and how having a predefined set of rules and system, because you need to be process driven and not result driven, right? So once you enter a trade, you should not be, okay, now the trade has come into a minor profit, let me book it. No, your trade might be a very good trade as per your setup, and you need to give it its full liberty to go as per. So once you enter a trade, either it is hitting your stop loss, either it is giving you your target. And target, again, when I take positions, I do not have fixed targets as such that market is going to go here, up to here, or up to here. Yeah, there are definitely resistances and fib levels which you can set as initial levels of target that you are focusing. But what I usually try to do is I try to take minimum 1:2 hour risk reward setups, wherein I feel that the market has the room to go at least twice of what is my the risk, the amount that I'm risking on this particular trade, and that will actually help you be a profitable trader in the long run, right? And as I said, predefined set of rules and system is extremely, extremely important. Another thing you can do is, again, this is something which might be offbeat and not many people speak about this, but yes, taking a break from trading. Sometimes when you feel that trading has become too overwhelming, or maybe you're spending too much time in front of the charts, you need to take a break. As simple as that. You need to take a break when you are feeling overwhelmed. You need to take a break when you have hit a profit or loss which is bigger than you had anticipated in the first place. You need to take a break from the market, because once you have hit a profit or a loss based which is much larger than what you had anticipated on that trade, the subsequent trades that you will take will be not based on the setups, but based on your emotions that are running high inside you after that particular big profit or big loss. In case of a big profit, your confidence will soar out of the box. You'll be like, I am the king of trading, and now I am gonna, the next trade that I'm gonna take is gonna break this particular record. And similarly, in the case of a big loss, what you will do is you will be planning on revenge trading, wherein you will want to just simply recover this particular loss, and you will simply end up over trading, right? So again, the traps that we spoke about, so FOMO, if you have fear of missing out, the best option or the best way to control fear of missing out is set the system. If you have missed a move and you feel that you out of the fear of missing out of something or a similar trade, you are entering into trades based or not based on your setup, please shut the system. Do not trade on fear of missing out. And that is something which I believe is the most simplest thing to do, is do not look at the markets. If you have seen that, okay, there's a good trade which could have been taken, but I did not take it. Now, because I did not take this particular trade, I'm not going to rush into another trade without my setup being formed. You need to have that amount of mind over control on your mind. And the best way to overcome over trading is, I believe, limiting the number of trades, right? If you simply limit the number of trades that you are going to take per day. I'll share what the system that I follow in terms of uh, over trading is. I'll minimum not minimum. See, I believe I am a very disciplined trader. If my setup is not forming, I have shared with you guys in the past Nifty daily decoding Nifty videos that we do, wherein I have shared that today was the no trading day for me. But there might be a time where people, I have actually now never faced over trading. I have been uh, very disciplined about over trading. In fact, I had the fear of losing, which led me to miss out on trades. I'll come to that shortly, but over trading something is the best way to control is limit the number of trades set up. Okay, I am only going to take one trade per day. Initially, if you're a new beginner, one trade per day or one stop loss per day, and I'm shutting my system. If I have booked two trades in profit, I will take a third trade only by risking a part of the small profit that I have taken in the earlier two trades, right? In no way, if I have closed two trades, the third trade should not wipe out the entire gains of the two trades, right? So that is something wherein you can, and if the risk reward or the position sizing is not fitting into that particular calculations, do not trade, right? Usually, what I suggest to traders that I speak to is to control over trading. The best thing is simply limit the number of trades that you are going to trade. Decide it for yourself. After having that number of trades, be it stop loss, be it profit, shut the system. Do not even look at the charts, right? Similar is the case with revenge trading. Again, I say one SL, two SL, maximum two back-to-back SLs in the first two trades of the day. I will shut my system because I know post that particular stop losses or the series of stop losses, I am not going to follow the system, right? The emotions will ride higher in me, and I will end up revenge trading. All I will focus on is I will focus my mind on finding out setups, even if the setup might not be there. I will focus my mind on finding I set out the setups just so that I can cover the loss that I have done, just done, right? So the best thing is start afresh the next day, set the system. I believe you should be good, right? And fear of losing. Now, this is my favorite part, and this is something which I believe I come from a business family. We have a big setup of manufacturing setup in Rajasthan where we manufacture spices. And since the very beginning of my the time that I was introduced to the business, we were taught about profits, right? We are doing this particular business, or we are trade in this particular trade so that we can profit. Losing was never a part of the game. Nobody actually taught me how to lose. All we had to do was win the most number of markets, have the best products and profits all along the way, keeping a good safety margin and everything, right? So I was never taught losing. It was only in the world of trading wherein you have to accept the fact, and the day you accept the fact that losing is a part of trading, and you should be okay with it, because even like I said, even if you do everything right, the market will sometime behave in a way irrationally wherein it will take your stop losses. It might give you big losses, but the fear of losing is something which had helped me from taking trades. I planned out something. The same was happening in front of the screen, in front of me, right in front of my eyes. I could see the potential profit that I could have booked if I entered the trades, but I did not enter the trades. I could not simply swipe the order window on my phone to punch in that order, right? So that is something which was the fear of losing in the markets, which kept me from doing that. And the best and simply the best way to overcome this is backtest the system that you have. Backtesting the system to the maximum amount that you can, right? Spend your weekends on backtesting the system. First, develop a system, spend it on backtesting that particular system. Say, for example, if we are doing trap trading, find out traps in the past on that particular instrument or on whatever system that you are trading in, and backtest it for the last 2 years minimum, 3 years maximum. Maximum, there's no limit, but minimum, I believe, is 2 years. Day by day, you should go back and backtest the particular system. Keep notes of them, right? On this particular day, start with 1 month. I'll backtest this particular setup on a 1 month basis. So on in the last 1 month, all the setups that had formed according to the setup, what was the win ratio? If I do this, if I take this trade on this strategy based every time it occurs on the screen, out of 100 trades, what is the win rate? Is it 50-50, or is it 60% win rate, 70%? What is the winning rate of that particular system? And not just the winning rate, but you also need to backtest the risk reward that the system is offering, right? Now, breakouts or breakdowns usually have the worst RR. Reversal trades, trap trades have the best RR. So that is my experience from the market. And while you are getting or backtesting the system, like I said, just not the win rate or the lose rate, but also the risk to reward ratio, which is usually a part of that particular trade. You will see that, okay, 1:3, 1:4 is something which this particular system is giving me most of the times, not all the time. No system is perfect, but backtesting the system will give you the faith or the ability to trust that particular setup. And then once you have backtested it for a very long period of time, see, market is very, very irrational. Anything can happen any point of time. But if you focus on the probability of the move, which move the probability is higher, I believe you will be able to focus on winning trades, and you will be able to take those particular trades when they are happening. The fear of losing, you will simply see them vanishing away, right? So that is something which nothing can beat about, but backtesting the particular system. Uh, sh and then again, needless to say, show up every day like a professional. Like it's if you take trading seriously, or if you are serious about trading, you want to take up trading as a serious career, you want to take up trading as a serious side income for yourself, you need to show up every day like a professional. Either you win or you lose, do not matter. You show up except for the time when you are taking these breaks, right? And I believe everybody should take these breaks, and the best way to take breaks is go out on vacations and make a rule, just like me. Do not trade on vacations. Now, throughout my videos, I keep on giving you small, simple systems or rules that I follow, which has helped me. And focus on long-term consistency much more than you focus on short-term profits. That is something which I believe will help you in the longer run. So do not look at daily intraday profits. So some days everything will be right, but again, the VIX might have fallen down. You might not capture a good move. Even if you've captured the good move in spot, the premium would not have given you the same number of points. Set the day with small profit, right? There's no problem. You have to focus on long-term consistency that you have with that particular system instead of short-term profits, and that will take you a long, long way. So I believe this is, I'll keep it to this. It's become a long video still. I thought I'll keep it in under 20 minutes. But again, once I start speaking on psychology, I still have a lot which is left, but I'll end this particular video around here. And I'll end this up with a simple thing, which is your biggest edge in the market is not a new strategy, it's mastering yourself. Look inside you, find out your system, backtest the hell out of it, implement it, right? Be consistent and stay away from the traps, focus on the solutions, keep working consistently. And I believe you will be a good trader in no time. But again, it's like not easier said than done. Uh, it will take time. You cannot be a trader overnight, or controlling the psyche is not too easy. It took me a good 1 year just to come out of fear of losing. Yeah, that's me, a profitable trader right now. But yes, to every trader who goes through these particular phases, and I believe you need to go through them. And this is a fight which is in which you are against yourself. And if you are serious about trading, I believe the answer is here. The psychology, it's in your brain. So I hope the video would be useful. So if you found this particular video useful, do like the video, subscribe to the channel for more practical trading insights, and put down anything that you might have to say in the comments box. Be it feedback, be it criticism, I am open to everything. All my videos are unedited except for the disclaimer that I add at the start. Unedited, unpaused, unscripted. I speak whatever comes to my mind, and even when planning the trades, I do it for myself and I record the same and I upload it on YouTube. So it's a simple exercise for me. But again, these are not, these are something which is coming straight from my heart or straight from my experience, rather, which I would like to say. So, yeah, that's it from my side for this particular video. I hope uh, this video would have also added some value in your trading. So, yeah, this is your Nifty guy signing off from today's video. Please focus on your psychology. It will help you in the very, very long run. That's it from my side for today. I'll see you guys again soon. Thank you so much for tuning in. And do not forget to like, subscribe, and comment. Thank you so much. Cheers.